Hello and welcome back to Invest with Sanjeev KMR BGP. Actually, we see that investor generally don't give value to the book value. But according to me, it is really valuable. Why they don't give the value? Because they usually compare the book value with share price. If share price is more than book value, then they understand that the share price is overvalued. And in the opposite side, if share price is below than book value, they understand that this is undervalued. After understanding that either overvalued and undervalued, what is the meaning of this? If this is undervalued, it means you should buy after that price will start going upside. Is this the indication? In other side, if share price is overvalued, it means it will grow rapidly from this position. No, no one can say anything. So, what is the conclusion after seeing in this point of view? So, actually, book value is not made for this only. So, there is one bigger picture we have to understand, and if we understand that part, then definitely that will be game changer for all of us. Why we do the fundamental analysis? Because we want to understand the company. If company is fundamentally strong, then we want to share the price, we want to buy the share of that company. But if you don't have the proper understanding about book value, then it is very difficult to understand the company or fundamental of the company. So in this video, I am going to share you a very important part of book value, which is generally not discussed in any platform as of now. So before getting delay, I'm sharing my presentation file and screener.in website. This is a disclaimer that I am not a SEBI registered advisor, and this video I am creating for educational purpose only. And if I use the name of any company or any share, that will not be my recommendation. So moving to next slide. Book value. Book value, it means total value of a company's assets minus liabilities. We all know this thing. And it tells how much the company would be worth if it sold all its assets and paid off all its debts. Actually, the meaning of this, when company face any worst circumstances and company in a closing phase, in that time, what company does at first, company sell their assets. After selling the assets, company at first company pay whatever liabilities they have. So they usually pay the debt or loan and all the liabilities they clear. After then, if they have remaining amount, then the company will pay to the shareholder. So book value tells us that amount which company is going to pay to the shareholders. And this is the formula: total assets minus total liabilities. And it is also same as shareholders equity. And another one formula is equity capital plus reserve. This is called shareholders equity capital plus reserve. In asset sides, we know property, plant, equipment, inventory, cash. These all are coming under assets. And in liability side, debt, taxes, and account payable. Total outstanding share. This term was not in previous slides, but in next slide we have some we have used it. That is why I have mentioned this term here. So total outstanding share is total shares held by the shareholder. So this is the example. Total assets is 1,000 crore and total liabilities is 600 crore according to formula total assets minus total liabilities. So 1,000 minus 600, it means 400 crore will be the book value. So what is the meaning? It means book value 400 crore. How much amount a shareholder will get? So that data you will get in next slides. But before jumping to next slide, I'm going to Screener.in website. Here you will get more clarity about book value. This is the Zomato Limited, and when you see the balance sheet of this company, you see that here is total assets. And according to formula, we have to subtract our total liabilities from total assets. It means total assets minus total liabilities. But you can see here both are same. In the March 2024 or every year it is same. Total assets 23,356 and here also 23,356. It means it assets minus liabilities, it will be zero. It means shareholders will not get anything. No, definitely shareholder will get something. Actually, usually in balance sheet, they include equity capital and reserve as well, but you need not to minus this one. So you have to minus only borrowing and other liabilities from total assets. So what you have to minus from total assets? Borrowing and other liabilities. So I'm going to do this calculation here. 23,356 minus we will add both, okay, borrowing and other liabilities, and we will subtract the sum of both, okay. So 2194 plus 749 equal to 20413. 20,413 will be the book value of Zomato Limited. And other way is we have to add equity capital plus reserve. Okay. Equity capital is 868. 868 plus reserve is 19,545. 19,545 equal to 20,413. Here is also the same result, 20,413. So we understood how to calculate book value. Now moving to the next slide. Now we will calculate book value per share. Book value per share formula is total book value divided by total number of outstanding shares. So total book value was 400 crore. And if total number of outstanding share is 10 crore, then 400 divided by 10. It means 40 rupees is the book value per share. Here you can also divide 20,430. You have to divide from total number of outstanding share. How will you know how much total number of outstanding share of Zomato? You have to divide market cap from current price. Okay. 2,43,391. 243,391. 243,391. 243 243,391 divided by 275 current price, 275 equal to 885. 885 crore is the total number of outstanding shares. So you can divide from this figure. 885 divided by 885 equal to 1 million. 800 here, divide 885. This was the 885, yes, equal to 23.06. It means 23.1. 23.1 is the book value. I think your concept also will be clear. Now moving to our slides. What is the use of book value? We can compare book value with stock market price. Okay. If the market price is lower than its book value, it could indicate that the stock is undervalued. And if share price is above book value, it means it is overvalued. But book value is not a complete picture. You need to see other things as well. How to increase book value? How a company increases their book value? There are three ways. Share buyback. How it will work? If company will buy back the share, it means total number of outstanding share will decrease. If denominator will decrease, it means book value per share will automatically increase. This is the very simple math. So share buyback with this company can increase book value. Second one, increase assets. If company increase their assets, increase their profit, definitely book value will increase. And third, decrease liabilities. If company will decrease liabilities, decrease loan, then book value will automatically increase. So here is the conclusion that book value gives us a snapshot of a company's financial health, and that helps us evaluate whether a stock is overvalued or undervalued. Now, just understand the actual picture of book value, which I have told you in the beginning of the video, that what we have to think and what is different in book value, so that we will get more clarification or we will understand that company is fundamentally strong or not. For that, you need to check book value is growing per year or not. But in screener.in website, you will not get the book value column. So you can check equity capital is growing or not. Or you can check reserve is growing or not, because book value is equal to equity capital plus reserve. So if equity capital is growing, but most of the time we see that equity capital will remain constant. In that case, we need to see reserve is growing or not. If reserve is growing, it means definitely book value will grow. This is the good sign that if reserve is growing, it means there is some profit. What is the reserve actually? Reserve is when company is going to list and company raise the IPO. In that time, they put the entry in the equity capital at the rate of face value. How much amount they are getting, as per face value, they put the entry in equity capital. And remaining amount, it means premium amount, because a IPO is not launched on the price of face value. Definitely, there must be some more price, that is premium price, you can say. So, remaining amount they put in reserve. And one more thing, they put profit. If company generates profit, they give the dividend from the profit. They do capex, and remaining amount they put in the reserve as a reserve. So if reserve is increasing, it means company is making profit. That is why reserve is increasing. And if reserve is increasing, it means book value is also growing. So here, this is the one way. And the second way is borrowing should be decreasing. And other liabilities also should be decreasing. If borrowing and other liabilities are decreasing, it means our book value is growing or increasing. So this is the way you can check and you can get the conviction that our company is fundamentally strong or not. So this was the thing. I have created this video per week value, book value, because it is actually valuable, and I usually see in this point of view. So definitely you will see according to this. Definitely you will get more benefit in your stock market journey. So if you see anything was valuable in my video, please like this video. And one more thing I want to say to all of you. Actually, my channel is very new, but I am new. I am not new in stock market. I am new in social media platform in YouTube only. I have been working in stock market field for more than 14 plus years. But I have started my YouTube channel last month. So this channel is very new. But my mission is I want to make a community of wealthy people. And I want a transformation from middle class to rich class. So in my this goal, or in my this journey, you only can support me. How? Just I am clearing you. Actually, I am making this video for the benefit of the audience. But how it will get benefited to all the person, to most of the people, if it is not reachable. So you need to make it reachable for all the person. So please share it to all your friends, all your relatives, so that everybody will get the clarification about finance and stock market. Because the stock market is the only place where we can make more profit, or in terms you can say that more than 25% profit we can make in only stock market. We don't have any other assets where we can make this kind of profit. But we should have proper understanding. Without proper understanding, we usually lose our money. And we see that 90% people lose their capital in stock market without proper understanding. So in this channel, through this video, I will give you the proper learning so that you can also make money like me. And this is not a rocket science. This is very simple. You have to follow the say some strategy. And I'm sure that if you follow your strategy, and if you stick with your system, definitely you can make money. And one very important thing, that if sometime we see that there is fall of 1%, 1.5%, or 2%, we feel a, we feel fearful. Why? Because we don't have the clarification about the stock market, about the company. So, and we don't have the proper, like, if we are buying a share, but we haven't decided that way. If there is 2% fall, we should exit, we should sell, or we should buy. So it should be clear before buying a share. So everything I have, I will share in this channel. So please share my video, may share my channel link to all your relative, so that I will reach my mission. I want to create a big community of wealthy people, big community of millionaire people. So you can help me. And one more thing, if you have not subscribed as of now, please subscribe it. Thank you so much for watching my video, and I will see you again in next video.